let's welcome on board Sandip Sabharwal as well. Find out how he's kickstarting his week. Sandip, hi, morning. Before anything else, Sandip, on Friday, I recall you had Kotak on your radar and said, I think you're going to buy it around 1500 thereabouts, if I'm not mistaken. Now, looking at the numbers, the management commentary, you think it makes for a buy, or have you already bought it in Friday's decline?
Yeah, we did take some exposure, and I believe that the results actually reinforce this entire theme because of the fact that on the core business, on the deposit, credit, or the NPA side, there don't doesn't seem to be any issue. So it's just the some IT issues which will eventually get resolved, and many NDs have become negative because of that. So I think this gives an opportunity for longer term investors to actually chip in. And because uh, valuations of such stocks in normal situations don't fall so much from where they used to be. So in exceptional circumstances, you get that because, as all of us know, all good news and good prices will not come together.
Okay, fair enough. What has been your outlook then when it comes to the earnings so far? And given that we have quite a few nifty companies, especially within the auto space, Hero Moto and Tata Motors, set to declare their numbers this week, what is it that you would be watching out for?
So most of the auto companies we've seen, whoever has delivered till now, we've seen margin expansion continue, and that's a phenomenon I hope will continue for these companies also. And we've seen value uptake, which has aided the overall growth of the companies much higher than the volume growth. And that's something which we could see in both these results also. So the auto sector overall seems to be in a sweet spot still. Valuations, despite the run-ups, are not totally out of sync with historical valuations. So the outlook looks encouraging. So stocks will behave individually on whatever results they put out because there is some amount of optimism built into auto stock prices given the way they have moved.
Sandeep, want to discuss Titan because I think after many quarters, the margins as well as the profitability both have been quite disappointing, and especially for a stock which is the leader in its sector. Now a lot of competition with newly listed players as well, and almost seems priced to perfection. While the damage could be deep on Titan today, when is it that you buy more? And do you buy more or do you buy any of the peers?
See, Titan is a very unique company in the sense that the way they have built up the Tanishq brand, expanded the entire branded jewelry segment, and that's helped the other companies which are coming up now also grow. Now, it's not a company which we would, let's say, tend to avoid. Let's say, I would tend to avoid something like a Asian Paints right now because of growing competition. But this is a company you don't avoid for a very long time. But then, like you rightly said, valuations need to come to reasonable levels. The valuations are just too high given the result delivery and their outlook, where they see profit pressures and growth issues continuing for at least the next 2 quarters. In this situation, a stock trading at some 60, 70 times 2 year forward doesn't make for a buy. So I think there'll be two parts to it. We'll see some correction and then we'll see time-wise consolidation also. Subsequent to that, we can look at it. Right now, it seems quite overvalued given the near-term growth prospects.
Sandeep, the other one is DMART because you've seen a very gradual uptick and recovery. And once again, the numbers have looked good. What's your call here, if at all you have exposure to Avenue?
No, I don't because this is a stock I just cannot buy because of valuations, because valuations at 100 times earnings next year. Um, I it, I don't understand how analysts still give buy on these recommendations, given the fact that the trend growth rate in the best case for Avenue Supermarts could be 20% now. And for 100 P to sustain, you need a 40, 50% earning growth for the next many years. So the overall full year growth is just 7-8% in earnings, I believe, and the last quarter saw around 20%. So 20% is the best case they'll be able to do. So in this situation, given that it's a illiquid stock and people who hold don't want to sell, it's possible there is some sustenance in valuation, but upside, I don't see upside in this.
So, Sandeep, given that we are headed into volatile times, and I guess till the election verdict, you will see these kind of moves this way and that. What's your buy list looking like, or watch list looking like?
So I think Kotak we already discussed. Then more on the consumption side, I'm looking at where there could be revival. So post results, I thought DABA looked like a decent proposition because it's underperformed for so many years, and that's one consumer company which is saying that they are really seeing growth uptake. And I think valuation wise, it's trading at some multi-year lows also. So that's one stock we can look at. Otherwise, I think mainly I'm looking at uh, some other consumption names like Vedant Fashion, Page Industry, etc., where results will be bad. Maybe next quarter will also be bad. So that will give opportunity to maybe accumulate at levels where whenever the revival cycle plays out, we could make disproportionate returns.
112 points higher for Nifty. Looks like, I want to go back to that tweet from Finance Minister. If this was the reason why markets fell, I don't think this was the only reason. That's my view. I mean, FIs are selling and they've sold irrespective of where the tax regime is. They could be selling because they've got compulsions in other emerging markets which are falling flat. But if markets fell because of this, the finance minister has clarified that there is no proposal whatsoever ahead of election. What happens in budget, we don't know. But ahead of election, come on guys, think about it. Ahead of election, to change anything on the tax regime. And it's pure speculation. So if that was the reason why markets fell, well, hopefully market should come back today. Sandeep, we are asking this question to everyone that how would you approach the election cycle? Sit on 10-15% cash, buy it after the election verdict, or don't do that mistake?
So I think it's less to do with elections, more to do with what's happening globally. So globally, we are seeing a phenomena where we are seeing some revival in China happening that's diverting some funds towards that. On the other hand, growth data from US indicates that there could be slowdown starting to play out. And that got people excited because of potentially lower rates sooner. But then that also impacts the growth of companies and valuations. So I think markets are in a dilemma right now where valuations are not cheap and there is uncertainty on growth as well as interest rate trajectory. So I believe that we should be cautious overall. On the elections front, again, it depends on what's going to play out. I think the extremely optimistic scenario of number of seats for the ruling dispensation might not play out. So we could end up with a lower majority. Now, I don't see that as a negative, but some participants in the market could. So I think we should have some cash on the sidelines.
Okay, autos, that's what my question was. So Sandeep, anything expected from autos? Because this entire perception that rural India not doing well, two-wheelers will not do well, at least that has got vindicated, that has got dismissed now.
The growth paradigm in India has not been simple to evaluate because there are some segments which are doing well. For example, two-wheelers have been doing well for months now. Now that doesn't fit in with the entire rural India slowdown paradigm. So I think it's a segment where people are selectively consuming. There is no all-around consumption because people have got hit by inflation in the past. So, like autos, like we were earlier discussing the theme of margin expansion, up value up, upgradation leading to higher turnover growth than sales. That should continue. And autos, I believe, are still in a decent space where valuations are totally not out of sync and look reasonable. LNT, I think there's expectation of some slowdown in order booking, obviously, as the management also guided and as all of us know that happens in most infra companies as elections come around. But that's something that's expected. So I think if there's some disappointment, stock gets sold out, then it will be an opportunity to buy because longer term story remains intact.
Sandeep, what's the expectation from the big guns, L&T and SBI both?
Exact expectations, I wouldn't be able to quote like in terms of what exactly market is expecting in terms of order flows, etc. I don't know. But I believe that there is scope of some disappointment in that, although execution remains strong. SBI, we have to see the NPA cycle because SBI was the first one to be very aggressive on advances growth. And to that extent, we have to see whether that's leading to some uptick in the NPAs or not. So if it is not, then I think SBI could continue to do well.
Okay, Sandeep, we'll let you go on that note. Chat again soon.
If you like this video, then like, share and subscribe to ET Now.